Muted trading activity ahead of FOMC meeting. Stocks in Asia were mixed on Monday as investors await a U.S. Federal Reserve meeting set to happen later in the week stateside. Mainland Chinese stocks were mixed on the day, with the Shenzhen Composite down 0.195% to 1,502.12 and Shenzhen Component slipping 0.33% to 8,780.87. The Shanghai Composite, on the other hand, rose 0.2% to 2,887.62. In Hong Kong, the Hang Seng Index rose around 0.5% as of its final hour of trade, a day after large crowds gathered to demand that the city's top official step down after she suspended, but didn't draw a controversial extradition bill. Over in Japan, the Nikkei 225 closed just above the flat line at 21,124.00. Shares of Apple supplier Japan Display plunged 7.202% after the company announced that Taiwanese flat-screen maker TPK Holding had decided against investing in it. European stock markets closed marginally lower on Monday, with a profit warning from Germany's Lufthansa hitting airline stocks. The Pan-European Stock 600 index finished 0.1% lower. France's CAC 40 was led higher by luxury stocks. HSBC rose 0.9%. It was among the biggest boosts to the Stock 600 after it announced plans to expand its branch network by around a quarter as it opened a new location in Apple Inc.'s hometown of Cupertino, California. U.S. Commerce Secretary Wilbur Ross said that President Donald Trump is perfectly happy to impose tariffs on the remaining $300 billion of Chinese imports if the two superpowers fail to agree to a deal. Ross also said that Trump is giving very serious thought to slapping tariffs on all auto imports, including those from the European Union. Those statements capped investor optimism at the start of a new trading week. U.S. stocks ticked higher on Monday, with the tech-heavy Nasdaq powering ahead as investors awaited a pivotal Federal Reserve meeting for clues on the path ahead for interest rates. The Nasdaq Composite Index rose, boosted by 1% to 3% gains in shares of marquee companies such as Facebook Inc., Apple Inc., Amazon.com Inc., Microsoft Corporation, and Alphabet Inc. Banking stocks gained 0.16%, while the broader S&P 500 financial sector edged up 0.08%. The central bank is expected to leave borrowing costs unchanged at its two-day policy meeting starting Tuesday, but market expectations are for a rate cut as early as July. As for the currencies, the greenback was mixed after a strong rally on Friday in reaction to an unexpectedly positive U.S. retail sales and industrial production data. Fresh reports have partially eased market concerns over a rate cut by the Fed and gave a boost to the dollar. The euro-U.S. dollar turned marginally higher but failed to break the 1.1250 intermediate resistance and retreated. A short-lived boost was due to poor U.S. data. The manufacturing gauge by the NY Empire State Index plummeted to minus 8.6 for the month of June, the lowest level since October 2016. The National Association of Home Builders and Wells Fargo said that their index of builder confidence in newly built single-family homes fell to 64 from 66 in May. In commodities, Brent failed to extend the recovery and returned below the $60 mark as signs of an economic slowdown amid international trade disputes outweighed supply fears stoked by attacks on oil tankers in the Gulf of Oman last week. The additional pressure came from China, where industrial output growth fell to the lowest level in 17 years amid trade tensions with the U.S. The dim outlook for oil demand growth in 2019, projected by the International Energy Agency, IEA, on Friday was also driving the futures lower. In geopolitics, though danger of an immediate confrontation over last week's tanker attacks, which the United States blamed on Iran but Tehran denied, appeared to recede, tensions over the strategic route remain high. As a reminder, a fifth of the world's oil passes through the Strait of Hormuz. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.